The Federal Reserve claims to be independent. The Federal Reserve claims to be apolitical. And yet today, the former New York Federal Reserve Bank President Bill Dudley wrote an op-ed or an editorial in Bloomberg suggesting that the Fed tried to influence the 2020 election by not cutting interest rates really at all or fast to hurt Trump. So the former New York Federal Reserve Bank President Bill Dudley encouraged his one-time colleagues not to help Trump's, quote, disastrous path of trade war escalation, end quote. He even suggested in a Bloomberg editorial today that the Fed try to influence the 2020 election by not cutting rates further. Quote, after all, Trump's re-election arguably presents a threat to the U.S. and global economy, to the Fed's independence and its ability to achieve its employment and inflation objectives, end quote, Dudley wrote. Trump tweeted Tuesday that the Fed has, quote, quote, has been calling it wrong for too long, end quote. So if you've done research on this, you realize the Fed is anything but independent, anything but apolitical. There are, in fact, the Fed has a screening process where they only look for PhD economists, really, who have degrees from certain schools, who have a certain type of politics. Ben Bernanke, I believe at one point was a registered Republican, but his true colors have been showing a lot lately. In fact, he told Jim Rickards, that was revealed in Jim Rickards' new book, Aftermath, that Ben Bernanke's hero was FDR. So if you're a Republican or conservative, I don't know how your hero can be Franklin Delano Roosevelt, considering all the bad things he did. If you want to know about the truth about the Great Depression, read the books from Murray Rothbard called America's Great Depression, and then also Amity Shlaes, The Forgotten Man, which will paint a totally different light than the generalist historians and generalist economists who have written books praising FDR and his Treasury Secretary and the other Keynesian interventionists. So let me continue here with the article, but this is going to contribute to my thesis that there is a lot of panic, a lot of chaos, a lot of panic, a lot of confusion, a lot of chaos, and a lot of desperation at the Federal Reserve, and there is a lot of infighting, and I will lay out the case and talk about other firings and other research papers that support this, because there are literally people at the Fed now who are writing research papers that totally contradict each other, sometimes within a couple weeks or a couple months now. So, former New York Fed President Bill Dudley, this is a CNBC article, I'll attach a link to it if you want to read it more. Former New York Fed President Bill Dudley is calling on the central bank not to help President Donald Trump fight his trade war with China. In a sharply worded commentary to his one-time colleagues, Dudley urged Fed officials not to lower interest rates simply as a backstop while the president continues his tit-for-tat tariff battle with the Chinese that has escalated in recent days. Quote, central bank officials face a choice: enable the Trump administration to continue down a disastrous path of trade war escalation, or send a clear signal that if the administration does so, the president, not the Fed, will bear the risks, including the risk of losing the next election. He wrote in a post on the Bloomberg News site. Dudley went so far as to suggest the Fed could and should try to influence the next election against Trump. Quote, after all, Trump's re-election arguably presents a threat to the U.S. and global economy, to the Fed's independence, and its ability to achieve its employment and inflation objectives, end quote, he wrote. Quote, if the goal of monetary policy is to achieve the best long-term economic outcome, then Fed officials should all resign. No, I just added that. Then Fed officials should consider how their decisions will affect the political outcome in 2020. Trump has taken on the Fed repeatedly, last week even equating Chairman Jerome Powell with China President Xi Jinping and asking in a tweet, who is our bigger enemy? The president is demanding sharply lower interest rates that he says are needed to keep the economic expansion going and to help fight the trade war, also to help weaken the dollar. The president is demanding sharply, I added that part about weakening the dollar, because the Fed wants to claim that they don't want a too weak of a dollar. They want to try to manage a controlled devaluation of the dollar. The president is demanding sharply lower interest rates that he says are needed to keep the economic expansion going and to help fight the trade war. In his latest attack, Trump tweeted Tuesday that the Fed, quote, loves watching our manufacturers struggle with their exports to the benefit of other parts of the world. He added that the central bank has been calling it wrong for too long. Dudley said the Fed should refuse to play along and could go further than Powell's inference last week that monetary policy might not be effective in starving off the economic damage from tariffs. Quote, officials could state explicitly that the central bank won't bail out an administration that keeps making bad choices on trade policy, making it abundantly clear that Trump will own the consequences of his actions, he wrote. Doing so would send a signal that the Fed won't be complicit in the trade war, while also preserving much needed ammunition for rate cuts down the road that might be needed to combat economic downturns, Dudley said. Markets expected the Fed to approve another 25 basis point cut to follow the one okayed in July, the first in 11 years. Remember, Trump is asking for a 100 basis point rate cut, which is 1%, which is 4 quarter-point rate cuts. He would probably settle for less than that. Seems like the markets are pricing in an additional 25 basis point or quarter-point rate cut to follow the one okayed in July, the first in 11 years. And by the way, still technically we're in an economic expansion, so I believe this is the first time in history where there has been a rate cut while there still is an economic expansion. We are over officially on government statistics over 120 months of official economic expansion. I think it's like 124 or 125 months, the first in 11 years, and are pricing in a nearly 80% chance of one more before the end of the year. In his speech last week in Jackson Hole, Wyoming, Powell pledged that the Fed would continue to do its part to support the economy, but did not lay out any specific intentions. The White House did not respond to a request for comment. So the yield curve is crashing. The yield curve continues to get even more inverted. It has had some rallies, but it seems that there's a lot of flight capital coming into the U.S., coming into the U.S. Treasury market from the European Union, from the U.S. stocks. A lot of money, I think, is leaving the U.S. stock market. A lot of money is especially leaving emerging markets and coming to the U.S. Treasury market, and also from China. And there is a lot of evidence that, like I said, there is panic, confusion, chaos, and desperation at the Fed. So Bloomberg ran a story recently, I think it was in July, that in May there was 2 big firings of managers at the New York Federal Reserve trading desk, and that was part of their manipulation plunge protection trading team, and they haven't been replaced. And so there's dissension in the trading department at the New York Federal Reserve. And what was interesting about that story was Bloomberg was actually given access to interview people and to view the trading desk at the New York Fed, which had been the New York Fed had claimed for a long time didn't really exist, was not a big deal. So that adds to more dissension that the manipulation part of the New York Fed is not functioning properly. And then also, remember I reported in February that there was a very big research report that came out from the San Francisco Federal Reserve saying that negative interest rate policy, or NIRP, if it had been implemented in 2008 and 2009, it would have created a far faster recovery in the U.S. Well, recently there was another research paper that just came out from the Federal Reserve, from the same San Francisco Federal Reserve, in the last couple weeks, and this one was published in an economic letter titled, quote, Negative Interest Rates and Inflation Expectations in Japan, and it just totally contradicted it. It said NIRP actually compounded the problem, negative interest rate policy, or NIRP, actually compounded the problem it was meant to address, and was hardly the panacea that the San Francisco Fed said back in February would have helped quicken the recovery. So you have big contradictions. You have at Jackson Hole recently, you have Lawrence Summers, who is an advisor to these central banksters. They hold him in very high regard, Larry Summers. Over his 30-year career, he's really gotten none of his predictions right, except for the one prediction about how to manipulate the gold price and how to lower interest rates, how to manipulate the gold price to prevent interest rates from spiking. Donald Trump at one point, guys, the reason I put this picture up is Donald Trump at one point did want to audit the Fed. I think it was one of his campaign promises he brought up, but I don't think he's really serious about it. The Fed has made it very clear that the Fed and its lawyers have made it very clear that after that one-time partial audit, the Government Accountability, or GAO audit that Ron Paul got both political parties to agree on in 2011, that was it. There was a one-time partial audit. We found out the $16 trillion in interest-free loans was given out to foreign banks, foreign corporations, foreign governments, foreign central banks, multinational corporations, etc. No approval from the American taxpayer, anything. And the Fed politically screens a lot of stuff. I was going to bring this up. I forgot to bring this up earlier. But if you want proof that the Federal Reserve, that they do have a very bad political bias, read Danielle DiMartino Booth's book, Fed Up. If you've not done so, it's available on audiobook. And she worked at the Dallas Fed for 8 years maybe before she left. And there were very few Republicans in the Dallas Fed. There was even a lot of Bernie Sanders people in there. So a lot of democratic socialists and socialists, a lot of Bernie bros and Bernie sisters inside the Federal Reserve who had Bernie stickers and were big democratic socialists working in the Fed. And she goes into detail about that in the book. About if you want to learn about every day-to-day working procedure and all the gobbledygook and all the inner workings of the Fed on a daily basis, I recommend reading Danielle DiMartino Booth's book, Fed Up. Yeah, so meanwhile, inside the story about the trading room was from August 5th. Zero Hedge reported on it, but they're quoting the Bloomberg article. It says, meanwhile, inside the plunge protection team chaos. And it talks about the chaos and dissension inside the New York Federal Reserve in their trading desk. And you have all these what is interesting, though, guys, I think about the mainstream media is even in Bloomberg, you're starting to get articles in the last month or two questioning the credibility now of central banks, which is very good. Finally, in the mainstream financial media and the mainstream, they're starting to question, oh, you mean central bankers can't fix everything? Oh, you mean central bankers can't save us? So Ben Bernanke is going to deserve a lot of the blame for all this mess that's coming. He trapped the Federal Reserve. He gave them very few options with all the QE programs. Yeah, and Mark Zuckerberg's dumping all of his Facebook shares. He can't dump them fast enough. Yeah, Carney is looking for a new job, supposedly. He wants to get out. He wants to leave the Bank of England. So he already helped ruin Canada. He already messed things up further in England, and now he's looking for a private sector consulting gig. You have gold and silver starting to move very nicely, too. Gold price is up to $1,550. It's up $13 today from what I see on the charts. Silver's over 18. Wow. Well, we'll see. We have to see silver close above 18 for a number of days or weeks, and then that will give me more confidence that silver can hold 18. Did the 30-year go below the 3-month? I think it did temporarily. I haven't checked on it. I think it did temporarily yesterday. I haven't checked on it today. Yes, I spend time looking through economic and political cartoons to find interesting ones that are thought-provoking, that are appropriate, apropos for the topic. And I thought this one was pretty good. But if you go back through financial history, I did an entire history lecture on this. The Fed presidents typically are bullied or cave. They've been caving for decades now to U.S. presidents. Whether it was William McChesney Martin, where I think Lyndon Baines Johnson almost beat him up, or actually did assault him. Yeah. Lyndon Baines Johnson, who was an absolutely horrible president and an absolutely horrible person. He was a monster, actually, to a lot of people. And he actually beat up his Federal Reserve chairman. And then Arthur Burns, I think, was threatened by either Richard Nixon or... Richard Nixon. Arthur Burns was threatened. He revealed that in his biography. In his autobiography. So there's a long history of presidents threatening Federal Reserve chairmen to get what they want. Although you didn't have social media back then. So Trump's Twitter is a very big bully pulpit. Helen, I would not call Ron Paul a Republican. Well, he's more like an old Republican. He's like an old type of Republican. He's a non-neocon, small government. He's what the Republicans maybe were like 50 to 100 years ago. But I wouldn't call Ron Paul a Republican. And Ron Paul doesn't like the Libertarian Party either, because how ridiculous the Libertarian Party is. The Libertarian Party couldn't even get 5% of the popular vote in the last couple elections. That's how bad the Libertarian Party is in the United States. Oh, the 30-year is below the 3-month now? Well, that just shows you guys that on the price action, more capital is going into the Treasury market from all different places. I would love for the Federal Reserve to actually have an audit, but I don't think it's going to happen. I think that was it. The one-time partial audit in 2011, that's basically it. It was a one-time deal, and now we're left to extrapolate or make educated guesses about currency swap lines and how many more. They're not even really trying to hide the currency swap lines anymore, because the Fed gave a speech. GATA, the Gold Antitrust Organization, covered it, and my friend James, shout out to James, sent me the story. I missed it. And a New York Federal Reserve Bank employee, like a higher up, like a vice president or something, gave a speech bragging about currency swap lines. So they're not even really trying to hide it anymore. I hope central banks lose credibility, though. That would be really, really good if central banks lose a lot of their credibility going forward, now and going forward, especially into the next crisis. Kyle says he feels smarter talking about silver and gold markets after these podcasts. Thank you very much, Jason. You're welcome, Kyle. The gold and silver markets are very difficult to understand. If you only look at the charts, you're not going to understand a lot of the stuff. The mainstream media intentionally does not cover gold and silver markets well. They will only cover gold probably. They're going to start talking about gold now that it's starting to go up, and silver. So they'll start pumping it if it starts going up more. But they're not going to talk about any of the underlying fundamental reasons or why what's happening in the market or anything like that. Manuel says the problem with the Fed is that it concentrates entirely too much power in the hands of too few people. This creates a system that makes evil doing both possible and simple. Yeah, and also all of their mistakes are papered over. And the Fed makes a lot of mistakes, guys, routinely. But they can paper over. They have the ability to create digital fiat, debt-based fiat currency and credit out of thin air. So they can literally, and the Fed technically is never insolvent, so they can paper over all their mistakes. And this is what I anticipate is going to happen with these collateralized loan obligations, these CLOs. There's at least $600 billion of this garbage. And these are all the CLOs, which I covered a couple weeks ago on the research. These are made up of junk bond debts in the CLOs. So potentially all the CLOs could go to zero. So the pension funds, the insurance companies, some of the others that are holding this garbage, the Fed may have to buy them all out. I don't even know what a glint card is. Thank you for the super chat, Penguin. When to buy other commodities? This is just my opinion, not financial advice. I would avoid, are you talking about trading stocks, commodity stocks? What are you talking about? I would avoid, for commodity stocks, commodity producers, I would avoid energy and base metals right now. Because they're tied to China, and China is slowing down a lot. China's economy is contracting a lot. They have really serious higher food price problems and currency problems, and that may be why China does want to actually do a trade deal. But the copper price just hit a 2-year low. I would stay away from base metals, almost all base metals for now. Nickel nickel is one of the few ones because of electric vehicle demand, but almost all other base metals are I would stay away from. Yeah, agriculture, I think China will have to continue to buy food. China has to buy food because they fear demonstrations, they fear riots, they fear a political revolution if the people are hungry. So they will make sure that people are fed. They will try to provide food or subsidize food prices. Up until recently, China was subsidizing the pork price, and now from what I've heard from one of my top China sources, they stopped the food price subsidy recently. So they were subsidizing the pork price for months. So the average Chinese person did not know at all that the African swine flu had devastated the Chinese hog their hog population by half or more. The Federal Reserve is setting a bull trap for gold bugs. Beware. Why do you think it's a bull trap, John? If other central banks are buying physical gold, and there's still physical gold demand, a lot of it for private sector in India, private sector in China, how can the Fed set any type of bull trap? I disagree on copper. The electric vehicle demand will not offset China's demand. China is the copper market. China makes up 50% or more of the copper demand on the demand side. And China's pulled forward decades of demand. Base metals are like copper, iron ore, steel. Well, steel is a derivative of iron ore. Those are the main ones are like stuff that's used in construction a lot. So anything that's like a side, that's like a secondary input for an alloy for steel, I would avoid those. That's what I consider base metals. So base metals are mostly copper and iron ore, and any of the byproducts from some of those mines, like molybdenum. Vanadium is used in steel. There is research for vanadium redox flow battery, but the battery innovation stuff is very uncertain. I don't think anyone can tell you which advanced battery is going to win. The smartphone industry has decided lithium-ion batteries, and for now, the electric vehicle is doing lithium-ion. And nickel seems to benefit. I was going to talk about this in a nickel lecture, but nickel seems to benefit the most from lithium-ion. There is a lot of lithium available, and it could come online very quickly, especially in like Chile and Argentina. There's a lot of lithium that can come online. So I'm not really that big on lithium. There's a ton of lithium stocks that are pumped too. There's a big pumper industry for lithium stocks so I don't like that. And I think there's a lot more nickel used in each lithium-ion battery than there is lithium. Hey, Rob, if you can't afford gold and silver, my advice is well, this is not financial advice, just my opinion. You need to figure out how to grow your income, buddy. You're going to have to stop. It's going to be tough, man. You're going to have to figure out a side hustle. You're going to have to build an online business. Build an online business, get a second job, or get a side hustle. There's books out about... There's a new audiobook that just came out earlier this year about all the different ways to get a side hustle. It's like 1,000 ways or something. Someone wrote a book about this. I was going to talk about it on another show. First, before you start buying gold and silver, you have to grow your income. You need secondary source. Everyone's going to need secondary or tertiary sources of income. Otherwise, your standard of living is going to be offset. Yes, it's important to, not financial advice, just my opinion, to accumulate physical gold and silver for savings, insurance, and wealth preservation. But there's a lot of people that can't afford to buy more than a few coins per month in savings. Most people can't afford to buy a gold coin per month. Also, you could start a gold money account, Rob, and you could put a little bit in and you buy gold by the gram, which is a smaller amount, and then after 6 months or a year, you might have enough for half an ounce of gold or an ounce of gold. That's the way to do it with gold money. The Gold Money stock, I just saw this on Twitter, but the CEO of Gold Money, Roy Sabotage, just announced that Gold Money, which is on the Toronto Stock Exchange, they just paid their first dividend. They just approved their first dividend. So Gold Money looks like an interesting company now for a stock that they're going to start paying dividends. Everyone, including myself, needs to hustle more. It's a sad reality. If you go back through financial history and all the crazy stuff that happened with financial panics and what central banks did, everyone had to find second jobs. What happened was during the Weimar Republic, the hyperinflation, well, before the hyperinflation, as it was accelerating from stagflation to worse stagflation, then to hyperinflation, you had a lot of people who were becoming currency traders, and it was more profitable to actually be a currency trader than to work a real job. Yeah, there's so many online sources of education now. There's Khan Academy. People can learn to code. There's a lot of coding jobs. I know it's the journalists, American journalists, don't want to hear the learn to code stuff. That'll get you blocked on Twitter, which is if you tweet that stuff at them, which is just ridiculous. But there's a lot of computer programming jobs available in the US that are pretty high paying. The thing about dividends, guys, is dividends can be cut. So you shouldn't, a lot of people, unfortunately, when I was at Investing Daily and I was an analyst there years ago, and they dumped me on customer service answering phone calls, there would be people all the time who would ignore portfolio recommendations. So there would be in all capital letters on every single page of each of our newsletters, there would be these blanket disclaimers that were a paragraph long saying, do not put all of your money into only one or two stocks because you're ignoring the diversification, you're ignoring the portfolio recommendations. They said to not put more than 10% of any of your capital into any one of the stock model portfolio recommendations. And all the time when I was dumped, because I was a junior analyst there for a while before I got promoted, I would be dumped onto the customer service phone calls, and people all the time would call in screaming at the customer service people, and then they transfer the call to me because I was an investment analyst. And there would be people like, you wrote up this great, I didn't write it, but someone else in my department did. They're like, you guys wrote up this great article about this company with a dividend, and I put most of my life savings into there, and I was living off of it in my retirement income, and then they canceled the dividend, or the dividend dropped. And I was like, the person was just chewing me out, and I was like, my God, you just ignored the disclaimers in all capital letters in a giant paragraph on every single page telling you not to do that. And then I would just, after he chewed me out, these people would chew me out for a couple of minutes, just screaming at me on the phone, even though I didn't even write those newsletters or the articles. A lot of the newsletters were other newsletters because we had a bunch of newsletters, and it was just ridiculous. Human beings are lazy, man. Sean, human beings are not all human beings, a lot of them. Complacency, laziness. People want an easy strategy. They want an easy strategy that gives them a reliable income. They want an easy strategy that can get them rich quick in the shortest amount of time. The way to be a good investor, there is no shortcuts. Anything that promises you quick profits fast, probably you're risking losing all your money. Santana says there's a gap that needs to be filled on the gold chart. Also, Santana, at the current prices, you're going to start to see, definitely in the next 6 months, probably sooner than that, probably before 2019 ends, so less than 4 months, you're going to see a lot of these primary gold miners, especially the primary silver miners now, you're going to see very big capital raises, and that's going to put a temporary stop sign. I think that's the best way to put it. It's going to put a temporary stop sign depending upon how much dilution is done. Some of these primary gold miners, you could see 5% dilution, which wouldn't be too much. Some of them you will see 10% or more. Some you might even see 20, 25, 30% dilution. That's how bad the balance sheets of some of these miners are. Yes, it is improving with higher gold and silver prices, but the balance sheets were so bad, so much debt was used to delay bankruptcy for some of these guys that they have no choice. And remember, this is why I warn you about why I do all the mining stock lectures in my playlist, that the mining industry CEOs have destroyed since 2009 or 10 over $80 billion. The gold mining CEOs over at least $80 billion, depending upon which estimates you look at, $80 billion of shareholder value, while they kept paying themselves high exorbitant salaries and stock options. So the majority of gold mining CEOs are very untrustworthy. Very, very untrustworthy. And I know this because I know what questions to ask. I know where to look for in the footnotes for all the annual reports and the financial statements and the investors' presentations. I've showed you guys this on the videos where I do the slide deck mix in the PowerPoint slide decks. And I've spoken with investor relations departments and senior mining management executives in interviews and in emails over the years, and I've been lied to routinely too. Yeah, so dividends, living off dividends for income, very, very dangerous. For many years, it worked for General Electric, and now General Electric's in trouble. Can happen to a lot of companies. There will be a lot more General Electrics out there. A lot of companies are rated BBB that should not be BBB anymore. I'm not saying that those large corporations are committing accounting fraud or insurance fraud, but I'm saying that there was very optimistic assumptions on their cash flow projections and their debt ratios, assuming that an acquisition would do well and that there would be higher cash flow, and that's why their credit rating was not downgraded. Do I see any risk of a silver confiscation in the event of a major crash or currency reset? Old World, that's a good question. Probably not. Probably not for silver. My source, one of my best sources in China, he just said that now buying physical gold in China, they have forced for years now people at retail bullion dealers that you have to do it on credit card. And so basically then with the social credit score system, they have your address, and that the Chinese government, if you own a kilogram or more of physical gold in mainland China, the Chinese government could easily, because they know that you own it and where you live and how much gold you've bought, because it's tracked now, they could easily confiscate it. So if things get worse in China, it's possible, I wouldn't say it's probable yet, I'd say it's possible, that the Chinese government could try to confiscate the largest private holders of gold in China. I like Frank Holmes' gold stock ETF. It's been doing well. I think it's a good basket of stocks. It has royalty and streaming companies in there. I think it's good. That's the Go AU one. I've talked about that. I don't know why Druckenmiller would invest in General Electric either. Okay, so I've gotten 4 super chats. Thank you guys. Thanks to Penguin, Kyle, Penguin again, and Sean. Can they do the same with Bitcoin? There's ways to hide your Bitcoin though. Once the Bitcoin is off an exchange, CoinCities, once the Bitcoin is off an exchange like Coinbase, there's ways to hide it. There's ways to do like cold storage. There's like the Ledger Nano X or the Trezor device. There's ways to hide it once you're off an exchange. If you keep your cryptocurrencies on an exchange like Coinbase, though, that's different. They could only track part of the transaction. They can only track part of the transaction. So I'll give you an example of this. The Chinese government cannot fully track private Chinese citizens that buy Bitcoin. What I hear is happening now in mainland China is that people in mainland China, to get out of the RMB or yuan, they are not going on an exchange with a VPN to buy Bitcoin or other crypto. What is happening, from what I hear, is that people are agreeing to meet in person. So in mainland China, people are meeting in person, and then someone sends a payment through their Alipay or WeChat Pay, and then the crypto is transferred peer-to-peer. So there is no transaction log of crypto being sold on an exchange in mainland China. That's what I've heard is happening. So the exchanges are where the trackable information are occurring, which is why, like, the IRS has demanded Coinbase turn over all their documentation. But if you avoid an exchange or you get the crypto off the exchange, I would imagine that would be a lot more difficult to track. You could buy a Bitcoin peer-to-peer. I think you could just meet in person and transfer it over. Buying USDT. US dollars? Or is that a different abbreviation, Mark? Dan. A rising dollar will really, really hurt emerging markets, because emerging markets bet on a falling dollar and they borrowed like crazy in dollar-denominated debt. So if the dollar rises, and the dollar is rising on the trade-weighted dollar index, Mark Santos, then that would collapse the emerging markets first. And we're already seeing, I reported on this weeks ago, there were massive net capital outflows out of emerging market stock markets. And I imagine that there will be net capital outflows out of emerging markets, debt too, corporate debt and government debt, because of what happened with Argentina and elsewhere. Oh, it's a... Trump should nationalize all the banks? Why would he want to do that? That would create even more perverse incentives, even more moral hazard. The bankers would then know that they're getting bailed out. They would do even dumber trades or loans. No, Santana, what should happen is these bankers need to go to prison. They need to know that they're going to lose their salaries. They need to know that they're going to lose their bonuses. They need to know that they're going to lose their stock options. They need to know that they could actually serve hard time in prison. Not a fine. Here's the funny thing about the fines, guys. The fines, and over $300 billion in bank fines that have been paid since the 2008 financial crisis, those fines, guys, were not paid by the bankers. They were paid by the shareholders of the bank. So the bankers got rich gambling with shareholder money, while the shareholders got the shaft. The shareholders got the shaft again. The right way to fix the banks is to throw the bankers, like what happened in the 1980 savings and loan crisis. If they commit fraud, or they intentionally they're kamikaze bankers and they try to blow up the bank's balance sheet, they need to go to prison. They don't get their high salary, they don't get their bonuses, they don't get their stock options, they go to prison. And I think that would drastically cut risk. Nationalizing banks will just create more moral hazard, in my opinion. You think Bill Dudley didn't mean it? They are trying to intimidate Trump, that's all. I don't know. He's going to get a lot of backlash from this. I mean, most of these people who work at the Fed, at the higher-ups, are rich anyway. They're very rich. Most of them are worth millions of dollars minimum. Jerome Powell is worth like $100 million. Yes, insurance will still exist, but insurance is going to lose a lot of money, guys, in the U.S. on collateralized loan obligations. And if the U.S. goes to permanently to ZIRP, zero interest rate policy, or NIRP, negative interest rate, what insurance? Because insurance is required to buy bonds. They have to buy. They're legally required to buy a certain amount of government bonds, and so they're not going to make good. They're not going to make the income they need off the bonds, because normally in the past they could get, like a retiree, they could get 5 or 6% years ago off a treasury bond and reinvest that would compound, and they're not going to get that anymore. So what I think the insurance industry will try to do is keep raising the premiums, but then people will stop maybe paying insurance. I think they will lose a lot of customers. But then normally what the insurance industry tries to do is get the government to make it a law. So then you have to have this insurance. You can't not have insurance then. So they may do that, where you have to have like all these different types of insurances. It'll be a law. This is the problem. The government is going to keep changing the rules. These large corporations are going to lobby the government, or the government's going to decide on its own that they want to change the rules. So what might be true now, even 6 months or a year from now, might not be true at all, because the rules changed. And this is, the average person doesn't want to do the work, but they're going to have to pay attention, because these rules changes could be very, very important. And throughout history, that's what governments did. Governments are very, very good, if you go back through history, at changing the rules. So when the government is about to get screwed over or default, if it's a large empire, or default or something along those lines, they change the rules. Okay, guys, well, I'm getting tired. I'm going to go take a break. Bye for now.